Today is Saturday, October the 12th, and this is the video that covers Friday, October the 11th. Well, we all knew that this could happen, and we all knew what the reaction was going to be. The opposite could have happened, so if you were in a lot of cash like I was, you missed an opportunity. At least I did invest in some more Apple on Thursday, and Caterpillar and AT&T. So the weekend turned out okay, or the week turned out okay, but I'm still at 50-some% cash. And now I'm going to just sit and wait and see how this falls out, because as it turns out, the China deal has no structure to it. It's going to be in phases, and we have no idea what phase one is, and it'll be 4 or 5 weeks before the wording is even finished. So we really don't know if there is a deal, and the market could become spooked and very suspicious. And you can see that in the end of the day, when you could say, well, you know, that was people just coming in and scraping off some unexpected profit. But it could also mean that there was some concern exactly what a deal was. If the president is saying there's a deal, I mean, he said that before, right? I don't need to sound like a broken record. But the volumes were considerably higher than usual, and actually higher than relative volume, and the advancers led decliners by 3 to 1. So that is going to take the market breadth probably back to the neutral line. Well, let's just refresh this and we'll tell you, because there it is, right above the neutral line. So we could be heading into more frenzied buying, or we could come back and we could have a slow change in momentum. I'm going to look at the charts now and see if they can give me any guidance. This is what the futures looked like trading yesterday, and of course on the China news, up we went until about 11:30, and then we came down and we tested the Globex high and we pierced the Globex high, and then we went right back up after Trump tweeting that there was going to be an agreement. I don't think they made a joint statement, which tells you something. We ended up testing 50% above the Globex high, and you can see that at 1540 in the last 20 minutes, selling started. And then until the market closed for the weekend, we just channeled it a little bit. So now let's look at the bigger picture for the S&P. And we created a new gap after having closed at 2940 roughly. We opened up with this huge gap and finished on the lower end of the candle. So that's not necessarily a very good sign. That means that the optimism was overexpressed in buying, and then calmer heads took over, and we ended up at the lower half of the candle. But we still have a gap to fill, and we're coming close to the cloud. We are heading for a collision with the cloud potentially, or looking for cloud support. Now the Chiku span ended up right here in the candle. So it's going to come out tomorrow or Monday underneath candle resistance. And that's something important to watch, because you look at the Chiku span here, and you can see that at one point the Chiku span went as high as here, but I tweeted that the Chiku span got resistance at the top of the cloud and then started to pull back. And then we had the surge in the afternoon up to here, and then we had the pullback. So the Chiku span and the cloud are still important. Tomorrow, Monday, we should look for 2985 as being resistance. And if we start off weak, then we're going to look at 2978 as being resistance. So let's just keep that right there. And that's what we're looking at. The Chiku span is going to tell us what the rest of the week is going to be like. Does it finish above these candles, or does it finish below these candles? And that's going to be important. Apple. So the market was up. Well, these are today's numbers, right? So Apple had an amazing day and hit a new all-time high. and finished just in the top end of the range, so that's very good. Look at the volume in Apple. So Apple is very bullish, and it seems that the iPhone 11 is sold out in some places and now has a back order. We haven't seen that in a new Apple release in some time. Caterpillar had an awesome day and got stopped dead in its tracks on the 200 simple moving average after having bursted through the exponential moving average. So we did say that we thought there would be some resistance by the cloud, then the cloud was going to provide us support, and then stock was going to take off. I'm still very bullish on Caterpillar. I tried to buy some more, but the price was just too high. On any pullback to test support of the cloud at 126.29, I would finish off my position in Caterpillar. I have 600 shares now, and it goes ex-dividend sometime this week. Check the calendar. GDX, of course, was suffered a lot as people moved into stocks and out of the safety of gold, and is now below the cloud. So, I mean, it's my defensive stock, so I'm not going to do anything with it. I'm still going to hold on to it. AT&T finished with almost a doji right in the middle, but above the 8 EMA. It continues to stay within this channel, and which is just fine with me. If it comes and has contact with the cloud at some point, that's going to be a good test, and we're going to look forward to that. Whirlpool, this is an inverse hammer. This is not a good sign. So you had a lot of enthusiasm, and then it came down and lost all the enthusiasm in the buying, and it ended above for the day, but it closed below its open and at the bottom of its daily range. So that should be a concern. So let us put a flag on that, and let's see if that signals a reversal in trend for Whirlpool. WDC, as soon as we got a China deal, we said we were going to see some action in the chip stocks. Well, we did, but not quite the action that we wanted to see. After having resistance on the 8 EMA, we ended up getting support yesterday on the 8 EMA and finished with this doji candle. So we have not seen the enthusiasm for this particular chip stock that we could have seen with the China deal. Amazon, this is Amazon's daily underneath the cloud. I still think we're going sideways and then moving up and trying to find an opportunity to pierce through a thinner part of the cloud. And as we move along into November and December, the cloud gets thinner and thinner. We should be bullish on Amazon. It's doing everything right. It's got some great Echo products. I just bought their Echo for the car, and it's a fantastic little device, and it's well designed, and it integrates so smoothly with your phone and your car Bluetooth. Apple hasn't done it as well in terms of these Echo type home speaker devices, and now they've taken it to the car. Google, up yesterday, but finished below its opening. That's not necessarily good, but then again, Google, Amazon don't stand to benefit from the China deal. The focus was on companies that do business with China. I'm not going to trade Apple, but I'm thinking about getting into some call spreads on Monday for Amazon. So I'm going to take a look at Amazon on Monday and possibly buy a December 20th call spread, because I think they're just going to have a great Christmas period. And if the farmers feel optimistic about the deal, and then China starts buying some crops, it'll be a good consumer Christmas, and Amazon will certainly benefit the most, I think, of any retailer. So want to keep it under 10 minutes. That's it for today. Just to go back and recoup, here is the volatility index, the VIX, the fear index, the greed index. We got a little nervous when October started, and now we're coming back into the comfort range where the VIX usually spends most of its time. The S&P has a gap it has to reckon with at some point. It will close it, if only for technical reasons, and when it does so, it might also come into contact with the cloud at the same time. That could be October the 18th. That's Friday. So let's look for this kind of action with the S&P. We could have some upwards motion, but I do believe that we're coming down to make contact with the cloud, and possibly it could look something like this. So let's watch for that.